What's happening, crypto fam? You're tuned in to the Elite Wealth Podcast, where we unlock the secrets of crushing it in the Web3 and cryptocurrency space. I'm Tyler Brewer, alongside the co-host Garrison Raleigh. And since 2016, we've been educating, enriching, and empowering hundreds of students across the globe on how to make waves and create generational wealth in this space.
Each episode, Tyler and I keep it real with you, analyzing the top market movers and industry leaders, the latest news, and how to avoid the potholes on the road to crypto riches. We're industry vets who have guided students over 500% gains in this wild 2024 market.
If you're a rookie crypto trader or a seasoned investor, you're in the right hands. We will teach you how to level up your mindset and skills to really capitalize on this decentralized revolution.
Subscribe now and join us every week as we lead you step by step into elite digital wealth with the Elite Wealth Podcast.
What's up, guys? Welcome to episode number 10. This is Navigating the DeFi Landscape Part 1. What's up, brother? Welcome.
How's it going? Going good for me. How about you?
Blessed and highly favored as usual, bro. Blessed and highly favored. Guys, in this episode, we're going to cover a little bit of decentralized lending and borrowing, some decentralized exchanges, aka DEXs. We're going to cover some yield farming, liquidity mining, stable coins in DeFi, and real estate tokenization. What's up, bro? What do you think about decentralized lending, borrowing? What do you think of the DeFi landscape in general?
It's an interesting spot. But like we said, this is part 1, so part 2 will be next, obviously, and we definitely need it. There's a lot in the DeFi. We're not going to be able to cover everything, but we're going to cover as much as we can and to the best of our knowledge, because there really is a lot in the DeFi, and I don't personally come close to knowing all of it. I don't know about Tyler.
You don't know all of it, bro? Come on. I thought you were the expert, bro. You have to know everything. You're not freaking Claude AI, my guy. Come on.
No, I'm not Claude AI yet.
My goodness. No, bro, you're definitely right. There's so much in the space that personally I don't know, that we're still learning, that everybody I think is still learning. We're realizing the flaws, the benefits, the pros, the cons. Ultimately, what I think is more beneficial than bad, especially when it's utilized in the right means. But let's jump right in, bro, to decentralized lending and borrowing. Let's get a little in depth on what this is, bro. If you want to break down what decentralized lending and borrowing is, I know we've covered it a little bit before, but if you want to break it down.
Yeah, no, that's a lot of crypto terms aren't very simple, but this one's pretty much as simple as it gets. You guys know decentralized lending. Well, you may not know decentralized, but we've covered it in the past. But lending and borrowing, you should know what that is. I'm lending Tyler something, or he's borrowing it. So what it is, it involves it's a platform, or there's a lot of platforms out there where people can take their crypto that they own, they can put it into that protocol, and they can earn interest on their holdings, or we could go there and look to get a loan and borrow against your assets. So it operates without intermediaries, and what it uses instead of a bank or a third party is smart contracts. So the smart contracts is code. It's just code in the blockchain that's going to execute certain transactions when something happens. So there's a lot of health factors involved with DeFi. So when you're getting a loan, you have a health factor. So you got the loan, and if the asset's going down, or if the asset's going down, odds are your health factor is going to go down as well, and you're going to have to put some more up to keep what you have. And if you don't, you usually get 24 to 48 hour notice before you have to, correct your health factor. And if you don't, you get liquidated. Your position gets liquidated, and
they take your money.
Exactly.
But yeah, man, there's some challenges, but ultimately, I think that there's probably more benefits than there are challenges, because when you look at some of these challenges, is it really a challenge, or maybe is it just a speed bump in the road or in the journey? Because one of them being maybe some vulnerabilities in the smart contracts that you were just talking about. Like maybe there's bad coding, which
Yeah.
we've seen happen before in other platforms, but sometimes that happens, bro. Sometimes we're human beings. Humans make mistakes. Everybody does. I'm not
Mm,
perfect. Garrison is close, but he's not either. But yeah, the risk of the smart contract vulnerabilities is ultimately one of the challenges faced with decentralized lending and borrowing, but not just decentralized lending and borrowing, but really crypto in general, especially when it comes to cryptography, which it literally is pretty much cryptographic coding.
yeah. Yeah, no, it's definitely something that you got to study and, learn what's going to be sustainable. Is this protocol going to be sustainable? If you go onto a platform and you see that, oh, you're getting 75% APY, that's probably not sustainable.
Dang it.
Um, or I mean, me and Tyler have been on platforms before where it's like 100 or 200% APY, and we're like, that's a little weird. And then,
And a lot of the times too, Garrison, when that was happening, it was during this phase of proof of funds, when FTX went under, and then all of a sudden everybody's like, wait. We need to make sure that there's a proof of funds here. We need to make sure that these guys actually got the monies in their
yeah,
pocket. And that I think, bro, was it kind of led to that.
yeah, and there's a lot of things that could go right, but also go wrong with smart contracts and crypto. So again, that's where education is going to come in play and learning, to follow the right people, or not necessarily that, doing your own research. But
Yeah, man. And then it comes down to the things like you said, like the over collateralization, which is a really hard word to say. I'm gonna try not to say it again because it's hard. But like the over collateralization when borrowing against your asset. Because when you need to over collateralize, you have to bring money to the table. Normally in the traditional finance world, you go to the bank, you say, give me my money, and then you give them a like 7, 8, 9, sometimes more, 10% of the amount you're taking out, right? Whether it's compounded, there's different terms, blah 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 blah. But ultimately, traditional finance, you don't bring money to the table. Well, in decentralized lending and borrowing, a lot of the time you do. And the reason being is because like you get to keep the amount you're putting on the table as long as what Garrison was talking about, the health factor remains safe. I think you and with Ave's protocol, which we've kind of tested with a pizza, you can actually take I think about up to like a max of 70 or 80%. I want to say it's 70. But I don't remember exactly. But we took a loan out to get a pizza and just really to test that the smart con or not the smart contract, but test the lending and the borrowing protocols. So we put some money up in there, right? You get to lend it, you get a little percent back, like Garrison was saying, but you got to be careful because if they're offering some 200%, is it sustainable? And why do they want your money that bad? Because if they're offering 200%, they need your money for something. They want your money for something. It's a money grab, right? It's a common day scam. It's like, yo, bro, if you send me $10, I'll send you 100 back. And it's like, what, bro? Like, for how? Like, don't worry about it, bro. Just. So, there's different things like that, but the lending for the pizza was pretty cool. But it just depends on what you're putting up as collateral. Because if you utilize a token that's gonna be that fluctuate in price, like Aave, like Garrison was saying, if it goes up, your health factor is at risk. If it goes down, your health factor is at risk. But if you do something in a stable coin, you stable coins are meant to stay the same, right? They're meant to stay about $1 exactly. That usually fluctuated 2 to 3 cents, but ultimately they're the same. Now the problem with that is the percent APY that you're paying is a little bit higher because it's a wanted asset. People want to have it, and Aave only has so much of it. So we again, Garrison, we could go so deep inside of decentralized lending, borrowing, even all these topics. It's almost like hard to stop. But like, all right, where do we cut it?
right.
But let's look at some of the opportunities because there are some challenges, but there's a lot of opportunities when it comes to decentralized lending and borrowing.
Yeah, no, there's definitely a good opportunities, and this is an opportunity we've talked about before. There's no discrimination. If you're in an unbanked area, it's, sometimes it is hard to get banks or loans even, or maybe you're in a country that can't afford to give out loans. Now you have a spot where you can go to get loans, or, even if you want to put your money
And
somewhere to earn APR, APY on it, you have that opportunity now.
yeah, bro. And like you just said, it actually just made me think of something, right? You go somewhere that they don't give out loans, and people are like, what do you mean countries don't have loans? Well, in a country, I'm gonna just punch the mic. In a country where the currency is like devaluing so fast, banks don't give out loans. Why? Because by the time they get the money back, it's worth nothing. It's worth zero. Like we've gone over some really crazy inflation, Garrison. I think in some of the earlier podcasts, actually, if I remember correctly. But
Yeah,
we went really
definitely.
in depth on some of these countries. I don't remember the exact details anymore because I feel like it was so long ago. But dude, there's so many places that you said are unbanked. Like, but this would benefit them because they don't have something like this. Even cryptocurrency in general, that they just have internet and power, bro. They're set.
Yeah, and there's also crazy things like, now this is still stuff that I don't really understand. Um, is flash loans. Tyler might be able to do a better job at explaining that, and it's kind of like arbitrage trading, I guess.
Yeah, I mean, that would be the benefit of like right because we're in the opportunities. That would be the benefit of doing it, but it's like Garrison said, it's really advanced. I believe again, there's a lot of it I don't even understand, but I believe you'd probably want to do it and utilize it through a smart contract because a lot of the
Yeah.
time these flash loans, like you have to pay it back in the same block. So like you have to literally find that arbitrage trade that's going to be in the same block as you want to take the loan out in. So it's kind of like Garrison said, really advanced. It's kind of that's risky. But it's also an opportunity because you have opportunity on the table to make money arbitrage trading. But Garrison brought up a good point was these places that are unbanked, these places that don't have it, and ultimately could leave a amazing positive impact.
Yeah, 100%. We have a little list here, like, um, some spots in Africa like Nigeria, Kenya, and Ghana. Sorry if I mispronounced those, but South Asia, like place like Pakistan, or, maybe there's wars going on at some of these places, and, the banks aren't really a thing at that time. You know, like even, small islands or things like that, don't have a bank yet, remote and rural areas,
Yeah.
don't have banks by them.
Yeah, bro. Think of a place like more like remote that's like in the middle of the forest, or maybe you're in like in the mountains in Tennessee and it's an hour drive to a bank. And imagine you don't it's 2 hour trip, just to go to the bank and back. You better make sure you don't forget anything. That'd be a bad trip, bro. But we
Right.
brought up Garrison, you brought up a good point. All those all those places that are really unbanked, bro, that could benefit from it and have a good impact because they could also get loans. And if you don't have
Right.
a bank, you can't get a loan. And if you have bad currency, they don't give loans.
Yeah. So yeah, there's really a lot of things just in lending and borrowing that we could probably keep going over, but I guess one word, let's go over decentralized exchanges again so people understand what this decentralized word is.
Yeah,
Um
man. Let's do that. If you want me to go over it, or you got it.
no, I can jump into it. So what are decentralized exchanges or DEX? It allows direct peer-to-peer trading of cryptocurrencies without a central authority. So me and like I can send Tyler cryptocurrency on this exchange without having to deal with the bank, or like right now, if I wanted to send him money through the bank, like wire money, it wouldn't happen until, well, first of all, it's 9:30 p.m. So it wouldn't go through till morning. And then also it'd probably take the rest of the day to get to him. So Tyler might not even be able to use that money till, 2 days later. Now with decentralized exchanges, especially crypto, It's open 24 hours.
Facts, man.
So
You don't.
I mean, I guess there could be a few challenges with it. So what are some of the challenges that come with decentralized exchanges?
Well, you look at it like there's the lower liquidity, bro. Sometimes these decent, you got to look and see which ones because there's a lot of them. So you got to look and
Yeah,
see some of these have lower liquidity compared to a centralized exchange, something like Coinbase. So Coinbase and Binance, I mean, they're some of the biggest exchanges. And then you go look at something like Uniswap, or like
like
even like the
pancake
swaps on,
swap.
yeah,
Yeah,
pancake swap, or even like swapping through some like a wallet like MetaMask or a Phantom. Like where are they sent? What platform are they using? So there's some of these platforms have lower liquidities, and you have to be careful when putting your money in there and trying to swap it because sometimes they don't have the money to give back, depending on how much you're doing. So yeah, one of the challenges would definitely be some of them having lower liquidity, but not all of them. You just got to make sure you're looking and using the right ones.
yeah,
And
for sure.
potentially front running. Um, somebody front running that token specifically. It could be not that token, but any token. So really, it's just a tactic for market manipulation. So like you see, for example, somebody has a lot of money, they're about to buy a token, and then you have a smart contract set up to where it front runs that token. And sometimes people will do that. They'll see, hey, oh my God, Garrison's got $1 million. He's about to buy freaking Meow Coin, and he's about to buy Meow Coin, and I want to buy right before him because if he's buying $1 million, price after he buys is going to be way more expensive. So then they're going to try to buy it right before he buys and sell off. There's plenty of bots that do this. People underestimate what's out there.
Yeah, and that also happens a lot with NFTs as well, where bots will get a hold of these and then list it. They catch offers where people, WETH offers where people are selling them instantly or accepting offers on lower pricing because they need, maybe they need the liquid or, don't want to be, they need the money fast. That's another way of putting it. And that I just forgot where I was going with that.
I don't know, bro. But one last thing I want to touch on with challenges before we go into a little bit more of the opportunity side is the user experience on some of these platforms, bro. How simple is it on like a average Dex to use if you've never used it?
It's not super easy to use. It can be a little bit complex to do a lot of the time, especially if you don't know what to look for or where you're looking at or even how to send crypto or anything. It can be hard sometimes, but that's again where patience comes into play and also learning before you use.
Yep. Yeah, educating yourself. That's a big thing, bro. Is there's going to be a time where people either want to learn or they have to learn how to use these platforms. It was the same with credit cards, right? You either ran yourself 10K in the whole credit card or you knew about them before and then used them the right way to get the 7%, 8% cash back that they offer, whatever deal they're giving. Um, but yeah, let's look at some of the opportunities, bro, with the Dexes. What do you think some opportunities are when it comes to like a decentralized exchange?
So there could be a few here. Like the other day, I guess, it was and not the other day, it was in July of 2024. Right now we're in August 5th of 2024 when Microsoft went down. There was a bunch of flights affected. There was Bank of America was affected. Also today with the stock market, liquidating trillions of dollars, a lot of the trading platforms have shut down. So that's one thing with the decentralized exchange that won't happen. It's not going to crash or stop. There's no specific hours of trading. Um, and what I think a lot of the time when banks or when these big stockholders are shutting down their platforms is because people are selling they don't necessarily have that liquidity or specific asset, and they panic, they halt all trading. They're like, hold on, we got to get our, our books in a line. The decentralized exchange, that's all there. It's already, it's all on the blockchain. So if something does happen where they're lying about where their liquidity is, people are going to realize that, which is what happened with FTX. That's what caused it to crash.
Facts, bro. Yeah, and you're right, bro. That's you look at there's a lot less risk. And ultimately that's right. If you want less risk for exposing your assets to potential downfalls, right? Like you said, bro, trillions of dollars were liquidated, and I think there was like there were 6 or 7 different trading platforms that were down. And
Yeah.
how does that happen, bro? Like what is the logical reason that all of them just blah? Like they just think about if every blockchain was just like, yeah, we don't work right now.
People would go crazy.
It wouldn't happen.
It'd be a
Like
scam. It'd be a big
yeah,
scam all over
it
again.
would get rugged because it probably wasn't a real token.
Right.
Like, but yeah, like it's ultimately pretty crazy, bro, to think about that.
It
Um,
is.
and then you have innovation and trading mechanisms, bro. Like we're talking about trading bots to front run your $1 million buy in Meow token, dude. Like there's so many different trading mechanisms, like gains trade. You think of gains trade, where normally you would need a broker. And this isn't even a decent, maybe it is kind of an exchange. I don't really know. Gains trade is some type of decentralized something platform. But ultimately, dude, it's cool because you can trade leverage on it for crypto. And if you utilize Polygon, you can trade a really little fee. Now, if you go into, let's say, the Web 2 traditional finance, if you want to leverage trade crypto, you go to find a broker online. You have to create an account with them, verify that it's you, verify, like you got to send them all proof of document, proof of this, do that. You got to wait 270 business seconds because, they weren't on the phone ready to work. When you go to decentralized exchanges, I mean, you are ultimately in control, but also keep in mind that comes at the risk of your security too, because if you're uneducated about the security, well, you were the security, bro. So, but
Yeah.
yeah, there's so many cool innovations when it comes to trading mechanisms that I think
Yeah.
are blow up.
Usually,
Even something that we saw
sorry.
earlier, bro. Go ahead. Sorry, my bad.
No, they usually support all chains as well. So like on
Yeah.
gains trade, you said you're using Polygon, but you may be leverage trading ETH at the same time. Or,
Yep.
there's like Magic Eden is a decentralized NFT exchange. It supports all chains.
Yep. Yeah,
Um,
dude, it's super. I'm thinking about what was it? Poly. We were on the call with Bridge 3 Labs, bro. What was it?
Poly Market,
Poly
I think
market.
that's
Yeah,
what it was.
where
Yeah.
you could bet on really like
Current
real life
events.
scenarios, like in specifically financial scenarios, like are they going to raise interest rates? They're going to do this. Is Bitcoin going to hit 45K? You can bet, you can buy the shares in it. You're pretty much trading the futures market, like future markets,
Yeah, it's pretty cool.
predictive markets.
Yeah, I
But
thought that
again,
was
a
pretty
trading
cool.
mechanism that, yeah, man, I thought it was sweet. But like you said, a lot of them are cross-chain interoperable. Oh my God, all these big words, bro. Cross-chain, they support all chains, right? That's what we're trying to say.
Yeah, so
Um,
basically like the impact of decentralized exchanges, it'll reduce the reliance on, the centralized platforms like banks. And it empowers us to have direct control over our own assets. Which
yep.
again, if you're not good at controlling your assets, maybe this isn't something you'd want. Maybe you'd rather have them keep track of your money.
Right.
If-
Get you
But
a financial advisor at Coinbase.
yeah, if you need help, or if you don't want to sit down and study it, I would definitely recommend getting help because blockchain
Not
is
from
not
Coinbase.
blockchain is not forgiving. So
No, it's
you
not.
can't undo something.
It is not forgiving at all, brother.
If you send my $100 to the wrong address, Tyler, I still want that $100. So you're sending another one.
Dude, I sent it though. I sent it. Come on, I sent, like, look, you can see it. You can see I sent it, but not to
Not in
your
my
address.
wallet.
Yeah.
Not in my wallet.
Yo, bro, that'd be some pain. I'd feel some hurt, bro.
Yeah, that would
Um,
not be fun.
right, bro. Let's jump into some yield farming and liquidity mining, bro. So,
Yeah.
what exactly is yield farming, liquidity mining? How does it work? What is it?
So basically it's kind of similar to, lending, I feel like, and borrowing in a way.
Yeah.
Users are providing liquidity to DeFi protocols in exchange for rewards, whether, I'm sure depending on the smart contract, you could be rewarded in anything. Um, and oftentimes in the form of governance tokens. So a lot of the times you're voting on what these liquidity pools are, where you put your money into that liquidity pool. A lot of the time you're rewarded these governance tokens, which is basically your allocation of votes. So there's maybe you buy, half of the tokens, so you get half the votes. You get half the say of what the liquidity pool does with the funds. So
Yeah,
there
bro. Oh, sorry, go ahead.
no, I was about to just pretty much jump over to the challenges, but go ahead.
No, yeah, I was gonna say, dude, yield farm, like you said, yield farming and liquidity mining, pretty much the same. In a way, not they aren't the same, but in a way they're similar. That's the word I'm looking for. To like you said, decentralized lending and borrowing. And because, like, for example, like you said, that they often give rewards in form of their governance token, meaning like their own native token to their platform. And Aave, I believe, actually does it too. So like when you like take borrow against it, you can take out in their Aave to like Aave token. You technically kind of have like a ticket in there, like not a ticket, but you have the token, the Aave token
Right.
still. It's like wrapped Aave, their
Yeah.
governance token, really. You know what I'm talking about. It's hard to explain it, but it's their wrapped like native token that will still like show in your wallet, but you can't spend like nobody's gonna accept it except for them, and you can trade it back to them. So yeah, bro, like you said, let's jump into some challenges that we might face with yield farming or liquidity mining, even though it is a neat concept, but something that you mentioned earlier we should be careful about, everybody should be careful about, is what type of percent are they offering?
Yeah.
Like you're putting your money in this pool, what pool? And that's some of the challenges that we're looking at here. So Garrison, what do you see as a challenge, or maybe it's something that may be difficult to do with yield farming?
Yeah, I feel like this challenge I'm going to bring up right here is probably a big challenge to all of crypto in reality, but it's a lot of research. It's kind of high risk and it's high complexity as well. So knowing how to research, what to read, like the white papers and smart contracts. Um,
Yeah. Like where's it locked up? What smart
right.
contract is it utilizing? Like what does the
What
smart
wallet
contract
is it
say?
under?
Yeah.
So you can see what that wallet's doing, or what few wallets is it under.
Who's
So
in charge of the project?
yeah. And another one would be like potential for unsustainable tokenomics. So, this is also where understanding supply and demand from the real world comes in play. Now, if you understand supply and demand, you might be good with tokenomics once you understand all the terminology. Wow, once you understand all the terminology. So, you got to learn how to study that stuff. And is it sustainable? Wow, we're struggling with our words
I
today.
know, bro. There's so many big words.
So is it sustainable, and um what are these tokenomics mean? What are they doing, and how are they set up the
Yeah,
proper
man.
way so what you're using is sustainable?
Yeah, and like to touch on the sustainability aspect, like for somebody that might not understand, like what do you mean sustainable, bro? Well, like let's say Garrison, locks up his 1 million meow tokens we talked about
Let's
earlier,
go.
and they're like, yo, we're gonna give you 100% return every 5 days. Like, how many meow tokens are there? Like we're like, at what point do these stop? Like, who owns all these meow tokens?
Right.
Um, so like that sustainability, how long can that really last for? How long realistically can they just give you and print more money until it becomes fiat currency? Does it ever
And
stop?
And yeah, and also on the other end of all these is also opportunity because guys, if it was easy, everybody would be doing it. But for those of you who are here that are savvy and understand technology and maybe are interested in something like this, rather than putting your, this isn't financial advice or anything, but rather than putting your money in a bank account and earning 0.1% interest or 0.2, whatever it is per year, maybe you just, you know, so a savings account. A lot of people have money just sitting in a savings account. Your checking accounts, that's usually moving a lot, but say you have 10K sitting in your savings account, rather than one, paying to keep that account up, two, paying when you want to take that money out or use it,
Inflation.
and three, inflation. Why not take that money out, put it into a protocol that you won't have to pay for to keep in, but it's also earning you more interest back. So instead of that 0.0001, maybe you're getting 2 to 3% a year. And sometimes there's protocols that can probably do 5 to 10% a year sustainably. But again,
Yep.
those APR and APY numbers are typically fluctuating as well on the sites. So it kind of changes throughout, which is also where the health factors and stuff come in play again.
Facts, man. Yeah, and I think another couple other opportunities is um for yield farming and liquidity mining, bro. There's probably a lot, but ultimately, you said higher yields. You probably have a higher understanding, which gives you a better opportunity in the market.
Right.
Because then I think if you can understand this, you're probably playing with a little bit higher liquidity, and it'll being able to participate in this, I think, is creates another opportunity, because if you understand it, then you'll have more liquidity for other projects that you might want to put money into. And again, it's not a guaranteed return. I mean,
Mm,
they're guaranteeing it, but you can't guarantee a return. And that's the thing that you got to keep in mind. You got to understand, where are they making the money from too. And that's why, is it sustainable is a question you really want to understand. But again, there are opportunities to this, and ultimately it's comes the yield farming and liquidity mining, the money that they make ultimately comes from lending and borrowing, which is why they're pretty much similar to each other.
Yeah, and one thing I always recommend, which we've talked about the volatility a lot of when you're doing these things. And again, this isn't financial advice or anything, but when you are getting loans or lending, I would recommend stable coins that are staying around the same price. They should typically stay at $1. Maybe they, like Tyler said, fluctuate, maybe 2, 3 cents. But it can be dangerous if you're putting something in at an all-time high. You're like, yep, I'm getting a loan out right now, and then Bitcoin drops 35%. Then you got to keep paying your loan, and then you're frustrated. Then crypto's a scam to you, and you're never doing it again. So there's just, risk to reward. So pay attention to that. And some other opportunities is getting access to liquidity pools for startups. So maybe you get a group of people together to put a bunch of liquidity into this specific spot, and on the smart contracts, you can only do specific things with it. So that's how you gain trust from these investors. Um, also democratizing like early access to new protocols and stuff like that. Giving people the rights to get their early access and things like that. So
Yeah,
there's
man.
there's a lot.
Yeah, and there is, bro. There's so much. Again, like, we could really go into depth on a lot of these topics and probably just continue yapping on each of them. But let's jump into we got stable coins in DeFi, and then we also have real estate tokenization. My favorite will probably be, out of the ones we covered, is probably real estate tokenization, because there's so much more, I think,
Yeah, it's super
to it. Like, there's so
interesting.
much more opportunity, there's so much innovation, like we were saying, technological advancements, like the trading mechanisms and everything along those lines. So before we jump into real estate, though, let's look at some stable coins in DeFi.
Yeah, I didn't realize I forgot that we had a little topic of that. Um I wouldn't have gone into it so much before. But yeah, like
No,
we've
no,
said a
it's okay,
couple
bro.
times, stable coins are cryptocurrencies to maintain a stable value. Typically, they're pegged to a fiat currency, like the US dollar, which, I don't really care about the US dollar, um, but yeah, that's what they are. They stay at around the same cost. Like, they can fluctuate, 2, 3 cents, but um, what are some challenges that you see, Tyler, with stable coins?
Honestly, bro, I just see probably like the fighting for control, like which really comes down to regulatory scrutiny, right? People fighting over the regulations on what's happening, especially for like these bigger stable coins. You have something like Maker, bro. We like Maker, the project. It has a stable coin called DAI, one of the only ones so far that hasn't been frozen. And so, like, at what point is it not your funds anymore? So that's where it gets scary too. But you also have to keep in mind, where is it locked up, right? Because a lot of these times, um, they are in centralized platforms when it's happening, but not every time. And that's where you have to also be careful with the stable coins. That's some of the challenges, but also maintaining stability, right? Like if it can't maintain its value, like the US dollar is not maintaining its value, that makes it a bad currency. Now the US dollar is a better currency than majority of other currencies, but it's like comparing a turd in the yard to another turd in the yard. Like that one doesn't look as bad. Like that's pretty much what it comes down to. I know it's funny, bro, but it like, if you can't maintain like your value, gold maintains its value. It looks like it goes up, but it really maintains its value because fiat currency is losing value. And same thing with real estate. If you value real estate, which we'll go into, but again, stable coins in real estate and all this kind of go in together, kind of all in one, but not the same at the same time.
Yeah. And yeah, those are some of the opportunities that kind of brings us up to like some of the opportunities that stable coins bring. Again, they're not volatile, so they stay at a specific area, which is $1 typically. And then,
So it's really good
um,
for times like, for example, Garrison, like right now. Like
yeah,
you look at the market, right? We have a volatile market right now. Bitcoin dropped. What was it just at, bro? How much? Like it
I mean,
dropped
it hit
tremendously
49K, and right now it hit 49K earlier this morning. Now
in a
it's
week
now it's at
ago it was at
55.
70K. Last week it was at 70K and it just touched 50K.
Right.
So, you're looking at like a 30% drop in 2 weeks. In 2 weeks.
So yeah, maybe you
So
wanted to take your profit at that 70K, move it into your stable coin, and then now you're buying up because you feel like the drop's done. And again, that's more advanced, and it's also going to be hard to catch the the top of everything and then catching the bottom of everything. Me and Tyler say this all the time. That's why dollar cost averaging is important into crypto, really anything. Even if you're in stocks, I would recommend dollar cost averaging. But again, not financial advice.
but yeah, bro, there's some opportunities as well, providing like a stable store of value for third world countries, other countries that have bad currency. What's crazy too is we have an amazing guy inside of our Discord, and he's in a place that uses a currency that and the government is strict about you using their currency. So like if you get caught using crypto, you'll get banned from their bank. So it's
Wow.
people forget, bro, how sweet it is to be on this side of the ocean, bro, or wherever they're at. Like people really forget and they don't understand how good we actually really have it. Even when you start comparing monetary systems and how money works in other places, and bro, overnight some of these places lose the money just goes 50% down the hole. Luckily, the US dollar takes 3 to 4 years to lose about 20%, but that's still bad, right? Imagine you're in a boat in the ocean and you lose about 20% of like it takes about 20% of water on every year. Every 3 to 4 years, it takes on
So
20% of water. How long could you last?
probably 2 years.
Yeah, right. Not
Because
much
once you got
longer,
50,
bro.
once you got 50%,
Yeah,
about
bro.
there.
And
That kind of made me think of something. This is kind of off topic, but like what it takes to run or keep a fiat currency strong is an army, a bunch of boats, and a bunch of aircraft carriers and a bunch of energy to make sure this currency has power in the world. People forget about that. Fiat currency, the reason why some of these countries have just crashed overnight is because they don't have, much world power or say in the world, or, maybe they're not even really watched by the UN or anything, so they can do what they want and just hurt or, hurt a lot of citizens, take a lot of money from them and, crash the currency while they make profits while everybody, loses everything.
Yeah, man, it's crazy, bro. It's really crazy out there. Stable coins and DeFi, I see, you know, giving a store of value really in all volatile markets and places that don't have stable currency, fiat currency is really an amazing opportunity, bro. But before we wrap it up here, let's look into some real estate tokenization. Um, let's jump into it, bro. This is something that's really unique. I think it's a little bit even more new, to be honest with you. It's not like it's still not really out there. There's a really cool website called Proppy where you can buy properties in cryptocurrency. And it shows you lists of them all over. But let's jump into it. So in depth, right? What is real estate tokenization? Well, really, it involves creating real estate ownership on a blockchain and enabling fractional ownership in a more liquid property investment. So there's some challenges that could be faced. And this is probably something that I don't have a lot of education on because it's more or less the real estate side of things that gets hard too, because you got to look at traditional real estate where real estate's almost like it's a whole nother market. I understand monetary systems and money. So when you look at real estate, it's like some of these challenges that we'll talk about, we might not even be thinking about the real estate side of challenges. So, the challenges we're going to see probably point out, Garrison, are going to be more on like the crypto side of challenges. But it also relates because you have so many people working on the other side of it, right? So one of the challenges being like regulatory compliance across different jurisdictions, different states, countries, but regulatory compliance in general, as far as like what's allowed, who can get this, how can you get this, like what blockchain does it use, and it's a very free working market, right? There's not a lot of third party systems. You think about it back in the day, bro, when there was like a horse and buggy and before banks, really, before there was really banks. And imagine you and I have a house in the village. If you want to sell your house, you have to find someone who can buy your house or that wants to trade you something for your house. And but kind of that regulatory compliance is in a way the same thing, right? You have to find that equal ground, how to do it, how to make it happen. And again, it's going to be different in every state and country because of the jurisdictions and all, the different regulatory stuff that happens in each place.
Yeah, that can definitely be hard. Um, I would I would not even want to do that. I would definitely probably try to figure out how to hire a lawyer to figure all that out for me.
Yeah, bro. Again, it's
That's
hard because it's the real estate stuff that I don't understand. I need to learn more about the
right.
real estate stuff for this to, for us to really break it down. But again, there's probably a lot of challenges, but there's also a lot of opportunities too. I don't know if you want to cover some of the challenges or some of the opportunities that you might see with real estate tokenization. I mean, there's a lot of both pros and cons.
Yeah, no, like I guess one other challenge that you didn't mention could be ensuring, proper property management and stuff. So, say you're across the world, say you're in China investing in a property here in the States, you know, you're not knowing if that's actually managed properly or, who's going in there and things like that. So
Or if that
that's
place
that
is really worth that much.
right. Yeah, and then there could be room for manipulation too as well. That's
Yeah.
another good point. But I guess that's a lot of times where smart contracts would come in play.
Yeah.
Um, people signing off on these smart contracts, having the
But
inspector actually sign off their name on the smart contract. So
yeah.
if the property wasn't managed or inspected correctly, you know who to hold accountable.
Definitely,
And
bro.
and again, that also brings up that could even be an opportunity
Yeah.
for people. If you know how to write these smart contracts, that could be a big opportunity for you.
Yep. Or even creating the real estate tokenization itself, like tokenizing the real estate could be the opportunity. Not even just the opportunity in taking your own real estate and tokenizing
Yeah.
it. But yeah, I think you could see maybe like a faster transaction, bro, with the real estate tokenization, which could really result into increased liquidity in the real estate market, more money flowing in, because bro, to do an average deal, I know it's not a freaking, hey, let's sign this, send it over type of thing, bro. Like it takes days. I know Matt has been working on his stuff. Like he's still working on the closing. One of our good buddies is working on the closing for his house, and um, there's so many
Yeah,
different
it's
things you have to go through, hoops, like finance, this, that. Again, this is on the real estate side of things that there's somebody listening to this probably knows more about, but there's so many people as far as the lawyers, the real estate agent, the like the finance people who's giving you the loan. I don't know the proper terms or titles for these people, but they know who they are.
yeah, no, there's a lot of terms in the real estate world that I don't know either. And it also kind of lowers the barriers for entry into real estate. You may not need a license now, or you know, like I
Maybe,
said,
yeah, maybe
you
the
could be in
fractional
China
ownership,
buying,
bro.
yeah, that too. Like say you have a couple people that want to split, you could easily split it with smart contracts and real estate tokenization.
Yeah,
Imagine
man.
you have a apartment complex. There's 500 rooms. You make 500 tokens and you sell those tokens. Each token that's bought, token number one is room number one. Token number 403 is room number 403.
Yep. Yeah, and like even you think of like this is happening in places like El Salvador currently. Like people might not know or understand like what? No way. But again, you go on property right now, you can buy houses in crypto all over the states, maybe the world. I don't know if it lists them in the world yet, but it's been a while since I've been on their website. Long story short, this stuff is happening now.
Yeah.
It's just gonna start happening at a faster rate soon. And it's only really a matter of time. But Garrison, like you said, it does lower the barriers to entry because you have the fractional ownership. You have that, right? Maybe not everybody has the 20K to put down, and maybe they got 4K and they can get a little holding, and maybe that becomes more valuable over time because maybe the
Yeah.
area improves, or
Or
there's
like
so many things,
getting
bro.
getting into a title company like
Yeah.
Century 21 is the biggest one I can think of. Like
Yep.
in order to be a real estate agent, especially starting out, you have to be in one of these or you're not going to have any credibility.
Yeah.
So you can't, I can't just go buy a house. Well, I guess I could just go buy a house and sell it again, but typically you need a real estate agent for all the legals and everything.
Yeah. Yeah, bro. Because then otherwise, if you do it by yourself, you just have to go and do all the work that they're doing
Yeah,
by
true.
yourself. For sale by owner, my guy.
And I could be
But then
doing
you're,
myself a disservice because I don't know much about it.
yeah, right. Then you're gonna mess up the deal, bro. Next thing you know, you gave it away for a freaking, I don't know. But yeah, man, there's so many. I see so many opportunities with real estate tokenization. As
I
far as like
agree.
the crypto side of things go, if I had a little bit more knowledge on the real estate side of things, I think combining the two, like there's so much that could be done with it. I think what that comes down to is some of the challenges. Again, we kind of went over like the regulatory compliance, like what's actually allowed, because with tokenization of an asset, and specifically real estate, you could pretty much do anything with it, which is comes down to the smart contract. So yeah, I think the impact is probably increasing the real estate market efficiency and liquidity. Deals are going to get done faster, meaning more money is going to flow in. Um, it's going to be available quicker, more readily. So um, yeah, there's quite a few, bro. I don't know if there's anything else you want to cover on any of this, or specifically real estate tokenization.
No, I don't really have much else covered, but I will, give a little hint of what the next episode is. Decentralized governance and voting, DeFi insurance, synthetic assets, cross-chain interoperability, DeFi and traditional finance, which they call TradeFi, it looks like.
Traditional fi.
privacy, decentralized identity solutions, layer 2 solutions and scaling with DeFi, also NFTs. We'll go into NFTs and DeFi, and the analytics and risk management, some of that as well, because all that's important. It's definitely why we're going to need 2 parts. We are about 50 minutes in. So do you have anything else, my friend?
No, bro. That's it, brother. I appreciate you. Awesome episode. Again, guys, this was Navigating the DeFi Landscape Part 1. Garrison gave you a briefing on Part 2. We'll see you next time. We appreciate you tuning in. Make sure you click the link. Make sure you join the Discord if you're not already in there. Check out our YouTube. We have so many valuable things for you guys inside of the Discord. Come connect with us. Come say what's up. We're super friendly. Our boy Crypto Bird is in there, who will soon be jumping on here on the podcast sometime in the
Yeah.
next coming maybe month. We'll put it. But guys, we'll see you soon and peace.
Let's go. See you guys.